The banks have refused to be left behind as everyone now is looking to open a money market fund account, and therefore wanataka kujoin the bandwagon with speed. In the coming few days, we are going to see more and more banks joining the party, by the way. But in this video, I am going to share with you a list of the banks that are already offering this service. I will tell you about their regulations, and I also talk about whether they are convenient or not. I will also tell you whether they are safer than their counterparts or not. But first, if it is your first time here ama bado huja subscribe, karibu sana, and please take a moment to press that subscribe button, especially if you are interested in learning more about personal finance and investment. You see, this poverty cycle from one generation to another, it needs to be stopped, and the only person that can do that is you. And the way to do it is through learning, sharing, and taking action. Banks have always had savings accounts, only that these savings accounts are usually discriminative and also give very low returns. And most of the times, these returns are below inflation rates. And with discriminative, I mean that if I come with a bigger pocket, I will get higher returns. And anyone that walks in with the smaller pockets, of course, you know what I mean, they will get less returns. And therefore, the emergence of the money market funds offered an opportunity for individuals to kill two birds with one stone. And that is to say that they will be able to accumulate while at the same time they are growing that money, because these MMFs are investment accounts as well. On top of that, they are not discriminatory. Everyone gets an equitable return. Both the savings accounts and money market funds accounts have always existed for a long period of time side by side, but many people were not educated about the money market funds, which therefore never made them or posed a threat to the traditional savings accounts for the banks. So now these banks played as custodians for all these other fund managers all this while, my friend, up until they started noticing that they are losing their beloved uninformed clients, who have turned into informed clients from their fixed deposits and their savings accounts into the money market fund accounts, of course, where they were getting a far much better return on the deposits that they put in. So about regulations, for you to be able to run a money market fund account in the country, you will need to be registered as a fund manager by the Capital Markets Authority, who is the regulator in charge of these funds. Please note that when it comes to the money market funds, it is no longer a central bank or CBK issue anymore. Rather, it is a Capital Markets Authority issue. Therefore, the bank will need to get a license to start offering a money market fund. And that also means that they have to maintain and play by the rules that have been stipulated in matters running a money market fund account. This ensures the safety of investors, since it isolates these deposits from their usual bank deposits. And as you perhaps already know, your usual bank deposits, those are bank account ya kawaida, they are part of the bank's balance sheet. But investors' money deposited in a fund manager's custodian account do not count as part of the fund manager's balance sheet. In this case, this means that the bank only makes money from your deposit in a money market fund account through the management fees only, unlike the freedom that they have with your other money deposited in their usual bank accounts, where they can make as much money as possible from the same that you've deposited. So on the matter of regulations, every fund manager works by the same rules, whether it is a bank or not. And on the subject of convenience, are they really convenient? I must admit that there is a great improvement, by the way, from when they started. But since this is not their core business, and it is also not one of their major revenue generators, 90% of all these providers out here, these banks, have not taken enough time or taken it seriously to invest in making running a money market fund account a convenient process. To start with, they seem to have in-house competition amongst the teams charged to push these products. And by this, I mean that those that are selling the normal savings accounts will at times even fool you that you've gone there to open a money market fund account. So they'll tell you, oh, we're opening a money market fund account, and then they'll give you a funny name. Kumbe it is a kawaida savings account that they are opening for you. And others are even going to an extent to tell you that, we've not heard about money market fund in this bank. Hapa tunajua something savings accounts. Simply because perhaps it's not earning them enough, or it's not their main business, or rather it doesn't count as a major revenue generator. Most of them do not have applications, and even opening up of accounts, you have to go physically and do paperwork at a branch near you. If you're lucky to get services, you can get them over email perhaps. This complicates the other processes such as tracking the growth of your money, withdrawing your money, and even topping up as well. I have had several complaints from some of these big names, yeah, taking someone round and round just because they just wanted their statement. Let me know in the comment section below, by the way, if you have faced any of these challenges already, if you have a money market fund account running with one of the banks that I want to name below. One more thing to note is that, yes, as much as several companies are already registered as fund managers, which means that they own the money market funds, there are still others who are affiliates. They have designed the product to present it to their clients, but they are not the fund managers. In other words, they are brokers or maybe intermediaries in layman's language. This usually comes as a disadvantage because as an intermediary, the fund manager will deduct the management fees kama kawaida, and then the intermediary will also take a portion of the returns before they deliver the rest to you as their quoted returns. Now, let's look at the banks with money market fund services before I tell you whether they are safer than other money market fund providers or not. And in no particular order, the banks with money market funds are KCB Bank, which is offering about 15 to 16% interest rates. And then number 2 is Cooperative Bank, which is also offering an average of 15 to 16%. Then third is Equity Bank. The money market fund account over there is not, or rather has not been performing very well compared to the other banks, but still it's offering returns above inflation and which are way more than their other usual savings accounts. Fourth is Mayfair Bank, which is also among the fast growing ones. Then fifth is ABSA. Sixth one, which is the latest addition to the money market fund provider, is Faulu Microfinance Bank, which is a subsidiary of Old Mutual. They are the latest entrants and are offering 16%. Seventh is I&M Bank, which offers a money market fund and they call it Capital Wealth Fund something. Then there's Standard Chartered with their Shilingi Fund. It offers the money market, but it is managed by Sanlam. I wouldn't want to end this list without mentioning the most popularly asked about provider, and that is at number 9, NCBA. But please allow me to clarify that they started offering a money market fund account but are currently not offering the same, since the money is invested in the fixed income funds. Most of these banks, by the way, offer unit trust, other unit trust products, including the fixed income funds, the United States dollar money market fund, among very many others. And to conclude, now that they are offering the same services, are they safer than the likes of NABO, Etica, or the likes of CIC? The answer is a big no. I started by mentioning that they are all regulated by the same body and need to operate according to the same set standards. This does not mean that opening a money market fund with the bank is less or more risky than opening the same with another fund manager, but what you're going to settle for at the end of the day depends on the kind of service that you need, the convenience, the reliability, which are now found more in those whose core business is the money market funds. So whether you settle for the bank or the other fund managers, the most important thing is that you get to open your money market fund account and start saving as soon as today, or accumulating towards your goals, or if you have a lump sum, start earning passive income, and above all, get to achieve your financial goals. Now, to understand more about the money market fund accounts, please check out this video over here. You can also check out the links in the description below to help you learn more in my masterclass and get started your journey as well in investing in the money market funds. Share your experience and see you in the next video.